Next up, folks, we have Brad Rogers, who's the Managing Director and Chief Executive Officer of Jupiter Mines. Brad's got a background in strategy and corporate finance, and previously he was the MD of Biz Industries and Head of Corporate Development for GRD Limited. This is his second year presenting at Diggers and Dealers, and a fun fact about Brad is a few years ago, he was the third best 12-year-old breaststroke swimmer in Western Australia. And he's still a tragic basketball fan today, I believe. So please welcome Brad to the stage, everyone. Thank you.
Thanks, Paul, and thanks for the overdue recognition of my pre-teen swimming achievements. Jupiter is the major investor in a really good manganese mine. It's one of the world's largest, and as I'll explain, best manganese mines. It's up and running as a producing asset. It's got no debt. We don't either at Jupiter. It's low cost, more than 100 years of mine life remaining. In the last 6.5 years since Jupiter has been listed with our share of that mine, we, Jupiter, have paid our market cap in dividends, notwithstanding Tshipi, the underlying asset that has actually supported those cash flows, has more than 100 years of mine life remaining. So this is a established, successful story already. Jupiter's value proposition to our investors, as I'll explain, is partly continuing our strategy of providing exposure to that great cash flow from this really well-run, really fantastic resource. And so that's up front and centre in our strategy. We also, by virtue of the fact of this investment, are the largest pure-play listed manganese miner in the world. And the manganese price, for various reasons, is volatile over time. Tshipi makes money and pays dividends even through the bottom of that cycle. When the manganese price goes up, naturally, Tshipi's earnings go up, Jupiter's share price goes up. And so that's another part of our value proposition. I'll take you through more of that detail in a moment. On top of those two established points of value proposition, Jupiter has a growth strategy to grow shareholder value on top of what we've already been very successful at doing. So I'll take you through more of that detail. You can see there on the page an aerial photograph of our mine Tshipi. It's located in the Kalahari Manganese Field, which is in the northwestern area of South Africa, quite near to the Namibian and Botswanan border. It's iron ore and manganese country, and very much the leading manganese district in the world. Tshipi's ore production this year was 3.6 million tonnes for a 30 June financial year just ended. That's slightly above its average of 3.4 million tonnes. On that 3.6 this year will probably be the third largest producing asset in the world, but Tshipi has consistently been one of the top 5 producing manganese mines in the world. It has more than 100 years of mine life remaining. I'll show you the cost profile in a moment, but one of the hallmarks of this asset, as I'll show you on the next page or the one after that, very stable operating outcomes, very stable costs, and the combination of those two facts, as well as the fact that there's no debt at the mine either, means really predictable cash generation. And so we think that this is a fantastic asset. We think this is a fantastic jurisdiction. So when I come to our strategy, it is about growing our exposure to this commodity we know well, to this asset we know very well that has produced these great results, and driving some of the benefits of that consolidation in South Africa. So you can see there an aerial photograph of the Kalahari Manganese Field in which Tshipi is located. This is a really unique area in that, as you can see on the page there, the Kalahari Manganese Field, or the main area in which Tshipi and these other important mines are located, holds 73% of the world's manganese resource in an area that is less than the distance between Kalgoorlie and Coolgardie. I can't think of another mineral that has globally important mines located cheek by jowl with each other. And that proximity of these important mines, where in that photo you have 5 of the top 10 producing assets in the world today, and all of the top remaining mine lives of already producing assets today in that photo. Obviously, when you have that situation, there is an opportunity to combine ownership and drive consolidation value. Everyone who's familiar with this situation can see that. It's been challenging for various reasons, but that is part of Jupiter's strategy. We think there's material value available from executing on that strategy, and I'll provide you an update and a bit more of an overview of that part of our strategy in a moment. This is a busy slide. The key takeaways are Tshipi, right back to the time of Jupiter's listing of our investment in this asset. The asset's been operating since 2012. Jupiter listed its share in Tshipi in 2018, and you can see all of these data points back to the time of our listing and all of that history, and you can see really uncharacteristic but fantastic stability in terms of sales and production on the first graph, in terms of safety outcomes on the second graph. The third graph shows costs relative to manganese prices. And important there is the gap, obviously, because that's what supported our ability to pay dividends even at the bottom end of the cycle, and you can see that in the graph on the bottom right as well. So this is now financials in Australian millions of dollars for Jupiter's 49.9% share of the mine, and cumulative dividends that we've distributed to Jupiter shareholders in that period of time. One mine, but we've paid 410 million Australian dollars to our shareholders in the last 6.5 years, notwithstanding the mine's got more than 100 years of mine life remaining. The next dividend is due to be declared by Jupiter on the 29th of August, so that'll make it 7 years neat. These on the page here, 6.5 years, but at our share price today, that coincidentally totals our market cap in dividends in the last 6.5 years. So Jupiter has a really good track record by virtue of the fact that this is a fantastic mine. And I've given you a brief overview of that in a moment. And two of the elements of our investor value proposition that I'll go through in a moment are based on continuing that really established, successful story to date. The third part is about doing more on top of that, and you can see that set out on the page here. There are 4 limbs to our 5-year growth strategy. The first limb is about continuous improvement, and this mine is already a great cost performer, but there's obviously more that you can do. And a large part of our continuous improvement focus at Tshipi is around improving bulk logistics. This mine is a long way from port. We don't have enough rail allocation, and so we road haul a lot of the material that is produced from Tshipi, and there are opportunities to improve financial and operational outcomes by focusing on logistics in particular. We think, as I outlined a moment ago, that there's an opportunity to grow our exposure and grow value around doing so, around this thematic that you are going to have on the supply side looking forward. Important manganese mines that are running today and have been running for the last 50 years come to end of mine life. Our mine has more than 100 years of mine life remaining, and there are a few others around us that are in that situation as well. So South Africa already is the leading jurisdiction in terms of market share for manganese exports. It's going to grow its share over the coming 10 years or so, and mines like Tshipi that are part of that endowment will have the opportunity to grow our market share as well. There's also an opportunity to consolidate ownership and generate value from doing so, both at Tshipi and beyond Tshipi. The third limb is about ESG. The mine already has a great track record in this area, and so Jupiter's been doing a better job in the last few years as part of this strategy and reporting that, and focusing together with mine operations on things that grow value financially and grow value from an ESG perspective, and putting in solar and batteries at Tshipi are a good example of that. We also have an exciting upside opportunity at Tshipi and at Jupiter to position for optionality around producing battery-grade manganese. We already produce at Tshipi a grade of manganese that's ideally suited to beneficiation into battery-grade manganese, but it's suboptimal through the steel cycle. So we have an excess of that material already sitting on the stockpile. Jupiter is entitled to half of that material as part of our marketing agreement. And so Jupiter's doing the work on positioning ourselves based on that set of facts to be a leading supplier of battery-grade manganese in the future. And so that's part of our strategy as well. Just an update on what's going on with manganese prices at the moment before I give a summary of our value proposition and where we're up to. Supply has been driving manganese prices for the last few years. Chinese demand is sideways. This is really a steel story, so if you're familiar with iron ore demand drivers, you're familiar with what's going on with manganese as well. That's fine for Tshipi because we're a low-cost producer. So even when you have a market like we've been in for the last few years, we're still making good money and paying dividends. So that's a nice place to be. There is support for the manganese price right now. It's sitting at around average levels, but it's increased over the last couple of months, and that's partly because, as you can see on that bottom graph, stocks of manganese ore at port in China are still quite low. They're 26% below average levels for the last 4 years. So then just rounding out on our investment value proposition for investors in Jupiter, there's really 3 elements, as I've highlighted earlier in the presentation. The first one is a commitment to the dividend policy that has been unchanged since the time of our listing, that has been underpinning the dividends that we've paid to date and has resulted in that really impressive dividend track record. We've paid an average 12% yield since listing against an ASX 200 average of 5%. The mine has no debt, it's stable, you've seen the costs, we beat and achieved our record production and sales this year, and so the stability of the mine and the stability of our costs has supported the dividend track record, and that's a commitment to continue that looking forward. There's an obvious upside that I'll show you in a moment by virtue of the strong correlation between the Jupiter share price and the manganese price. The manganese price, mostly recently for supply disruption reasons, can be volatile. The Jupiter share price provides that upside as well, and so there's an obvious play there. If you're at average prices or below, and we're at that situation at the moment, investing in Jupiter provides upside to that manganese price. And there was a period last year where there was a supply side disruption, the Jupiter share price doubled in that period of time. So that's part of the opportunity to investors as well. And then finally, the growth strategy that I just mentioned a few slides ago provides opportunities for investors to grow value through investment in Jupiter in addition to those first 2 limbs. This slide just provides you a summary that I think I've laboured enough in relation to Tshipi's strong track record and Jupiter's strong track record in paying dividends, low cost, stable sales, low costs at Jupiter. We fund our corporate costs through our marketing activities, and that provides us the ability often to pay 100% or sometimes more than 100% of the dividends that we receive to Tshipi out to Jupiter shareholders. This chart here shows you the correlation that I mentioned a moment ago, the correlation between the Jupiter share price and the manganese price. Manganese price goes up, as it has done right through that historical 4 or 5 years or so. Jupiter share price does likewise. This obviously provides a fairly no-brainer opportunity to invest around times when manganese prices are average levels or low and wait for something to happen. That could be around demand drivers, and we think that'll be the case longer term, or if anything pans through in terms of Chinese stimulus. But in the meantime, all of the peaks you can see there have been around supply side disruptions. There are 5 manganese mines in the world that make up 44% of the world's manganese supply. Ours is one of them. If there's any issue in the interruption of supply from one of those manganese mines, it immediately goes to price. And so pretty much all of those spikes you can see there have been related to some sort of supply side disruption. There was an important recent development which is really supportive of and complementary to our growth strategy, and that was a little under 3 months ago, a large South African company called Exxaro, who are one of South Africa's 50 largest companies listed on the JSE. They've been focused on coal production and are a significant player in that space. They're now looking at diversifying into other minerals. Exxaro has agreed to buy the other 50% of the mine that we don't own, as well as 20% of Jupiter at the completion of the transaction, at a price of 32 cents per Jupiter share, compared to our price today of 21 cents per Jupiter share. Exxaro is coming into this situation with a strategy aligned to Jupiter's own, and so we're very supportive of and excited by this development because we see it as being one where we can collaborate with Exxaro to generate value around further consolidation. That's something that they have as part of their own strategy, and it's obviously central to the Jupiter shareholder value strategy I showed you a moment ago as well. So in summary, we have here a situation where we've got a fantastic mine that's up and running, that's stable, that really has the runs on the board, both in terms of sales, costs, and ultimately cash flow and dividends. And that supported Jupiter as the major shareholder in that mine to be a great dividend payer to our own shareholders. We've got another dividend due to be declared at the end of this month. There's manganese price upside here as well, and that's part of the story that I don't think people necessarily pick up, but it's a pretty obvious one given the complete look through, no debt, low costs, positive cash generation, stable sales. That means the manganese price is pretty much the sole driver of upside here. We do make money and we do pay dividends at the bottom end of the cycle. When the price increases, as I've just shown you, it has fairly regularly, our price goes up as well. And so that's something to be aware of. And then finally, we've got a strategy here that we're embarked upon that we're delivering against today. There's been a recent development that we think really underpins the execution of the consolidation part of that strategy, and that was Exxaro coming in as a co-investor and also as the new major investor at Jupiter, priced as a premium to our share price today. Thank you very much for your time.
Thank you very much.